these properties, they're going to hit their 5-year mark. If you are planning to move bigger, you should take advantage when the market is actually on a more tepid or stagnant level.
After so many rounds of cooling measures, property price index still continue to go up.
We just ask everybody over here, right? What properties do you think will be a rarity in terms of the type of properties that has a restricted supply and a higher demand? And meantime, while our panel is thinking, right, let's bring in the nuggets. Come. Say hi, Fadila. Ivan, we have Yoda at the back.
Yoda.
Of course, you have this very nice announcement panel here. George, you can still see your receding hairline.
Yeah, it's okay.
I can recommend some supplements for you.
I think it will work.
Huh? You have a $4 million budget. But you only got one bullet. You only got one name left for yourself. Second property. Which one will you buy?
I wouldn't use the entire 4 million. Okay, firstly.
Okay.
Do I really need to use all the amount?
No, you don't need to use all. Alright, welcome to episode number 3 of NOTG, and this time around we're going to kickstart this episode talking about what will you buy if you have $4 million. What do you guys think in terms of what type of size and bedroom type should we buy? Should a property buyer buy in order to take advantage of the fact that we should be buying something with a restricted supply and more demand? So what do you guys think? If you look at this, in conjunction with Freehold 99, of course, with this one trend that we can see is that the amount of 99s has increased because government land sales are all 99 years. There's no more Freehold. Freehold are usually en bloc. It also shows, based on the buoyancy of transactions over the last 8 to 10 years, right, that buyers are very accustomed now to 99s properties as well. Right? If not, all these properties will be stuck in the market, but they're all taken up. Okay, so what do you think based on sizing? I mean, we can give a backdrop. Basically now, you look at one bedders or studio, they'll be around this size. This is like 1 bed, 1 plus study. This is 2 bed, 2 bath, or maybe some 3 bedders at 899 square feet. This is 3 bed compact, 3 bed premium. This is like 3 plus study and 4 bedder. This is usually 4, 5 bedders upwards, right? But in the past, that was different. So what do you think? Which one will you buy? Maybe start from Yu Rong.
I think to put the context first, why is there a division line of 2013 is because 2013 is when total debt servicing ratio was implemented. It dramatically changed how much a person can loan after MAS standardized loan eligibility across banks. And what happens is when everybody's affordability is restricted and developers made a business decision that in order to keep the price quantum palatable for the market, they have to start building smaller homes. Right? And that's why you see the shift in the chart is after 2013, developers built smaller units, but also at the same time that those layout in the newer developments nowadays are generally more efficient than the pre-2013 era where we see planter, bay window, etc. So it's totally not like just 100% loss of space. Okay, coming back to Melvin's question.
Which one will you buy?
In short, I would say that when you buy, think of when you're going to sell and who you can sell to, right? And I think the general advice is, if you are buying into something that is easy to buy, it will usually likely end up hard to sell. And reversing it, if you buy something that is hard to buy, it will generally lead to it being easier to sell. Of course, this is a general, it's not like a blanket advice. So my census is personally, I have a preference towards buying 3-bedroom at a minimum to 4-bedroom. This will be, okay, assuming I'm in the outside central region or I'm the rest of central region, this allows me to have a very healthy pool to sell to eventual HDB upgraders. Right. They come from a 4-room flat, 5-room flat. They are used to like a space. 3 bedrooms already. Right? So that will allow these people who have maybe profited from their HDB, right? They have the means to actually upgrade. And I want to sell to own stay people. I don't want to sell back to investors who are generally holding 1 and 2 bedders. Because investors, they are number sensitive.
Correct.
right? Whichever presents a better yield, a better numbers, they
Lower
are
price.
flexible in terms of location.
Yeah.
Whereas for own stay people, they focus on needs and emotions. They have a reason to be at a certain location based on school, based on school, based on parents.
Familiarity.
Yeah. And I, as an investor, I want to sell back to a own stayer. So that's my comment.
So go for 3-4 betas in the OCR region.
Actually, no. As in 3-4 bidders in general.
Right.
In terms of location-wise, I think we have to balance between your own preference in terms of your investment methodology,
Right.
as well as your budget, as well as whether are you going to stay there, right? So your own location also determine where you enter.
Right. So as we are speaking, I think what we'll do next is we will further dissect this chart
Yeah.
into OCR, RCR, and CCR so that we can see the percentage of all this in the 3 regions. Then we can make even a better decision. Thanks, Yu Rong. How about George? What do you think? Okay, let me rephrase my question. Looking at 2 components, the amount of supply in terms of the bedroom types and the size in the overall stock of the market for properties that are in the last 22 years. We don't calculate properties before 2000 because they will belong to the older category. What would you buy looking at also the freehold and 99s component? What type of properties will you store for yourself in terms of your portfolio?
I think largely it depends on which estate would it be. If I'm going for something that is OCR, because if let's say I'm going for something that's at OCR, maybe I can go for a 4-bedder. That price point, maybe I can only get something RCR for a 2-bedder.
Okay, so let's say I throw in a budget.
Sure.
You have
Exciting.
you have a $4 million budget.
Huh? 4 million?
But you only got one bullet. You only got one name left. All right? $4 million. And we all know that not all freehold properties that are near school or new launch or whatever it is, or in D9, 10, 11, not all of them will see upward kind of graph. Some has stagnation over the last 10 years, right? Okay. So you got 4 million, but you only got one name.
Why 4 million? Why the betting number?
So that I
4
can
million?
expand your choice now, right? So you can buy all the way up to...
You can buy anything.
You can buy anything, right? Okay, of course you cannot go buy CCR $5 million. Okay, you got 4 million. You can also buy CCR, RCR, and OCR. Which one will you buy? And don't talk about, it depends on OCR, RCR. Okay, just like for yourself, second property, which one will you buy?
Second property. I wouldn't use the entire 4 million. Okay, firstly. Do I really need to use all the amount?
You don't need to use all.
You
If
have,
you
you
want
have.
to buy a 1-bedder or 1.3 million at a new launch, also can.
Yeah, you can give the rest to Yu Rong. I will invest it for you.
I think I will go for the OCR area, but I will go for the bigger size units.
Which one?
4-bedder at least. Yeah. Why
New
is
launch or resale?
resale?
Why?
I think if let's say we are looking at OCR area, I think the resale prices are still quite attractive, and statistically, I think for a OCR 4-bedder, right, it accounts to just less than 20% in terms of the overall supply. So I think that in itself is already a huge rarity, and HDB upgraders, right, usually they will all go for the bigger units because they are so used to the space already. So yeah, with 4 million, I think it's quite comfortable. I'll just go for a 4-bedder, but I think Yu Rong might have some differing thoughts.
Okay.
Okay. Just name one property that you will buy tomorrow.
Tomorrow,
4-bedder,
You will.
OCR resale.
OCR resale. OCR resale. I'll probably buy area that is like at Choa Chu Kang. Because I think it's just right next to Teng Ah. When Canberra Town, before Canberra Town was announced, right, Sembawang prices...
Okay, and we're not talking about landed. We're just talking
Yeah,
about
condo.
Yeah.
Yeah, because before Canberra Town was announced, right, Sembawang prices was statistically lower than Yishun prices. After Canberra Town was announced, Sembawang prices actually have a peak, and it actually surpasses the price point at Yishun. So I believe with the new town hub at Teng Ah, we should see somewhat of a spillover effect.
Into Choa Chu Kang.
Yeah. And I think Choa Chu Kang, right,
So you buy a 4-bedder at Choa Chu Kang.
there's not a lot of condo developments over there already.
Right. Which particular condo will you buy at Choa Chu Kang?
Either Wonderville or Rainforest.
Okay. 4-bedder,
Yeah.
Where the wonder happens.
which is happening at how much? $2 million.
Less than 2 million.
1.8, something like that, right?
Yes.
Okay. Thanks. How about you? Maybe go to Grayce first. Which one will you buy?
Okay, wait, maybe we should caveat, right? Why we are only looking at private non-landed.
Yes, because
right?
of this chart. Yeah.
Yeah, so, okay, like why is this chart only talking about private non-landed,
Yes,
right? It's
yes.
also because like of the supply and demand question.
We should do one for landed also.
Yes.
The size of landed. Okay, continue. Sorry.
Yeah, okay, but anyway, no, it's because, like, let's say if we were to look at the entire market landscape, right, like moving forward, are you just writing, like, do this chart, do
Yeah,
that
I'm
chart?
writing a note for Brian later, so he's gonna have a hard time. Okay.
Oh my gosh. Okay, so basically for as the demographic shifts in the market, right, as we move towards like 2030, where we will see more and more foreign interest, more and more foreign buyers, right? As the demographic moves towards like a more 50-50 kind, like 50 Singaporeans, 50 PR plus foreigners, the kinds of properties that these foreigners will be able to buy is only this private non-landed segment, right? Which is why when for the purpose of the discussion, we are situating it within the private non-landed as something that will have higher demand naturally when you compare across the different asset classes like HDB, landed, and this. At a controlled supply, I think 20-odd%, it will still have the highest demand from both Singaporeans and foreigners and PRs. Yeah, so that's to situate, like, in case the audience is wondering why we're only looking at private non-landed instead of comparing, like, why would I not choose to buy like landed? So
No, I think he's waiting for your caveat to finish.
okay, yeah. Instead of like
for the
looking at
punch
like all these lah, okay?
But it's a good caveat. Thanks for that. Yeah.
Okay.
Okay.
Yeah, so okay, if you were to ask me, right, okay, in terms of investment horizon, if it's just 5 years, then instinctively I think I will not really be considering the freehold properties really. So traditionally, freehold properties, they have this idea that, you know, they have strong holding power, not strong holding power, strong it does
Value
not face the
retention?
lease decay. It does not
Okay.
face any lease decay, right? So people love to buy freehold because they think that my property will not decrease. But if we are looking at a pure 5-year horizon, right, it may be better to instead turn your attention to the 99-year because let's say for freehold properties, right, there will be less transaction volume first, right? Because of two factors. First is because for freehold properties, you do have that 15% premium generally, right? So this premium already makes it such that it is higher out of the reach of certain groups of buyers. So you have a smaller buyer pool. Secondly, if you are buying a freehold property, you may be looking at it as a legacy product, meaning that you want to keep it for your children, your grandchildren, or whatsoever. So this will indicate a less exchanging of hands, which means that the transaction volume may be less, which also means that it might not push the valuation so far up if it's a freehold property. So if you're asking me 5 years, I will look at the 99-year kind of properties. Okay, and then so for 99-year properties, naturally I would want something bigger. Because, so, okay, just to add another caveat, right? But maybe, okay, so mainly, really, a lot of buyers, doesn't mean you cannot buy 2-bedders or 1-bedders, because
Right.
there are a lot of buyers who are looking to enter the private market, and they are only able to have such a quantum, right? Maybe
Correct.
1 to 2, 1.5 to 2, and they can only look at perhaps 2-bedders. And 2-bedders are fantastic, you know, let's say even in the RCR
Right.
area, maybe as a half-own stay, half-investment, right?
Right. But how about yourself? Let's say now it's second property, you have $4 million total budget, left one name. What will you buy? You're left with one name.
Okay.
Because maybe your husband already.
Man, I
used it.
barely think about these type of questions. Like if I have 4 million,
That's why you're here, to get you thinking.
okay.
Okay, speak closer to the mic. Speak a bit
Okay,
closer
okay,
to-
sorry. So,
If you have 4 million and you can buy anything, any condos and apartments, not a landed property, what will you buy tomorrow?
okay, I may be inclined to buy a 2-bedder in the RCR. Yeah, so I think that the RCR and CCR, there's still a quite healthy price gap. So that it's an indication that there's still area for growth. I think as more and more young people, they have a higher buying power. They want to buy in earlier. They do not have such a big quantum. They have not started their family. They do not want such big units. They may be looking at the RCR, which is convenient for them to go to work. So I will look at maybe a slightly bigger 2-bedder in the RCR, which has a healthy price gap from the CCR region. Yeah, I think that will promise me some kind of growth, especially, you know, I think I'll look at the Greater Southern Waterfront area also. Yeah, I do quite like that area. So I might be looking at the area, 2-bedders, 2-bed, 2-bath, something that if I do not want to stay, I can rent out also, and then perhaps just keep it for an investment product.
Awesome. So 2-bedder RCR region. New launch or resale?
I think I'm not picky. I'm not picky. I think both are fine. It depends on the product itself. Whether I definitely want something that has a good gap and in an area where there is high growth. Yeah.
So you will either keep it for rental, then 5 years you can sell also.
Yeah.
Okay. Awesome. Great. How about you, Rong?
What would you want to buy?
Me? Okay, hey, I want to ask you. Okay, I'll answer first. Okay. Why are you wearing a cardigan?
Ask me a random question. Man.
Okay. What I will buy is this. Okay. So we're not talking about landed properties, but what I'm going to buy is this. If let's say tomorrow I need to make a decision, I will immediately buy a resale, 2,000 square feet minimum 4-bedder upwards within 2.5 million. 4 criteria. Resale, 2,000 square feet above 4-bedder within 2.5 million. Because the entire island right now, less than, I'm not sure, probably less than 60 listings. This, I'm very confident that within 3 years, if I can buy something within 2.5 million, it will appreciate by at least 500,000. I'm very confident. Why? It's because of this. When we look at all these choices and you look at the type of buyers and demographics that are buying into this type of properties and minimum 4-bedder, maybe single 4-plate, big size, 2,000 square feet, or maybe it's a penthouse. Usually their aspiration is to go for, let's say, a cluster house or a landed. But if you look at the entire island right now, an entry-level landed property is at least 3.6 million. Nothing below 3.6 million.
Unless it's 99 years.
Unless 99 years, right? And even 99 years is touching 3 already. Very scary. Even cluster houses, 99 is touching 3 already, right? So if somebody do not have 3.6 million, and I'm very confident that $3.6 million inter-terrace is somebody would buy today, it's going to be $4 million in 3 to 5 years' time.
Yep.
So there's going to be a huge gap. I buy something at 2.5. Next time is the next entry level is at 4 million for landed. There's a huge gap for me to play around with in the sense that I can still sell at close to 3 million. So when I sell at 3 million, that property is already at 4 million. So there's a disparity gap happening from this type of property to the landed entry level. And I do not have to compete with buyers that are in a dilemma to buy landed or to buy my 4-bedder penthouse or 5-bedder penthouse. Right. So I think this is a sweet spot category. And we can see from the amount of supply in the market that is dwindling. So this is the type of property that I'll be hunting for tomorrow.
What's the region?
Yeah.
Actually, there's not much left. It's only left. It will definitely be in the OCR. There's not much left.
Yeah.
Definitely will be 99 years. But I'm going for size because 2,000 square feet, I just need to appreciate by $200 PSF. You will appreciate by 400,000. That's all.
Is
That's
that
all
a
I'm
cut-off
looking.
age? Is that a cut-off age?
Actually, it doesn't matter because I'm very confident in the next 3 to 5 years, it will increase by $200 per square foot.
Because that would be the next best option.
Yes. Yeah. How about you, Rong? What do
Actually, the questions is
nice
so
cardigan, by the way. Okay.
The question is so random
Trying
because
to copy me. Okay. Okay, continue.
you're giving a $4 million budget and everybody end up not using the $4 million budget. Then so what's the point, right? So I also want to give some caveat first. Number one, assuming that I can't buy a landed property because if let's say $4 million, of course my first priority will
That's the
go
reason
for
why,
landed.
after doing real estate for many years, right, there's a lot of caveats and a lot of consideration point because as your knowledge build up, there's so many different choices. Okay, good. This is good.
Okay.
Okay, continue.
And so next thing is I will give 2 answers. Whether one, I will want to max out the $4 million and one, I don't have to max out the $4 million, right? So of course, if I'm going to max out the $4 million, assuming that you can give me $4 million and I don't spend it, you're not going to let me keep the spare change. Then, so what I will do is I'll go to the core central region, $4 million, freehold property. I'll try to get like a 4-bedder and within 1 kilometer of the top schools. So this will be assuming I need to blow my budget, $4 million, and I can't go to a landed. All right. If I can keep some spare change, so I will treat all of you guys to McDonald's.
Oh,
Right.
okay.
But okay, what I will do is probably I will buy something in the rest of central region, something that is 4-bedroom, up to between ideally if I can keep it within $2.5 million, that would be great. But I think the options will be very little because this is not based on what you say, based on square footage wise, right? So I can be like a 4-bedder and it's about 3,004 square feet, that's okay. Or if I want a bigger floor plate size, I can extend this budget to about like $3 million. So that will be my choice.
RCR, 4-bedder. It will still be a 4-bedder.
Yeah, I mean, 4-bedder is
Right.
good. Lah. I mean, there is
We're
enough
thinking about the
budget for me
exit.
to
Okay.
stretch. Yes.
Great, awesome. So, if we were to not just limit to a non-landed, right? Basically, I think the immediate option is what is your immediate option, Josh? I mean, my immediate option is that if let's say it's within 4 million, is to quickly snap up an inter-terrace, $3.6 million or something like that. What's your immediate option, Josh?
Yes, I will snap up an inter-terrace, but I'll be very particular in terms of the location. I want to buy in an area where there's a lot of very healthy transaction for landed property. That means either in D19 or D15, but it must fulfill certain criteria. That means the land size cannot be way too small. So it must be at least like 1,007, 1,008 square feet. If I can get something like that, I will definitely go for it.
But D15 confirm cannot get already. D19, D28.
D19, yes.
D19 can lah.
D19 have.
Yes.
Yeah.
Coven area. and
But
all
doesn't
that.
have to be something that is brand new.
Right.
Yeah.
How about you, Grace? What will you buy? If now we open up all categories.
Definitely, immediately, the thought is to go to landed, right? Because it's the same thing if we're looking at supply and demand, landed holds like at 73,000 units. So, of course, that is the rarest. So, definitely, I think the attention will flock there. If we are looking at, I have something I want to say and I forgot. Okay, so I will not get something that is brand new. Yeah, I might get something that is a little bit older that needs A&A. Maybe pump in the renovation, or maybe even might look at something, maybe I buy something older at about maybe 3 mil, and then I use the 1 mil to rebuild, completely tear down and rebuild. Yeah, so I think that I will not be looking at,
But 3 mil with the mini landed already.
Yeah. Land size.
okay, maybe
1,000 square feet.
3.5, then after that A&A. Yeah,
you-
so
you'll find
definitely I want to have some kind of, for it to be a little bit older so that there can be some renovation that I can do to pump up the value. Yeah, not purely from the land or the unit itself, but
Right.
for me to be able to pump in some extra value into this landed that I buy.
Right. Awesome. Hey, I suddenly got an idea. The next, Cephas, Grace
I think
also.
we are already starting the next part already.
But
Okay, the next, we can calibrate some of the webinars coming up, right? It's that 2-person one.
Oh.
It doesn't have to be just 1 person. It can be 2
Because
person.
you're very tired already, right?
No lah.
I think you're very tired already.
No,
that's
there
why.
can be a little bit like
Banter style.
yeah. It can
Oh
be
my
fun. It can be
God.
fun. Okay.
banter style, everything.
Yeah. Actually, it's good because today I was just sharing with a client that later I'll be going for a shoot at Banter style. Then they say they are looking for because they want to hear different opinions.
Awesome. Fantastic.
Yes. Yeah.
Great. How about you, Yu Rong? If you open up every category, will you one shot buy 8 industrial property, or will you buy landed or whatever? What do you think?
Industrial property, okay.
Why do you frown?
Okay.
Okay, this just shows that actually every type of property has different types of audience. Yeah, so somehow, because of preferences and our chain of thought, certain properties will always attract different kind of buyers.
And I think the caveat, like maybe like from my standpoint, is we are talking about growth lah, growth potential.
ROI
Yeah,
in 5 years, right?
Because if you talk about for own stay, right, then you can have a million kind of different choices and all can be correct because it fits into your own goals and needs and wants. Okay, so coming back, $4 million, buy a landed lah, quite no brainer. Yeah.
So all agree. But
Okay, so maybe my strategy might be a little bit different. So in the sense that, could I actually get a semi-detached land? Okay, maybe I cannot afford something that is like decent kind of condition that is like really that livable. But I probably do not mind if I can find something that is good land size, right? And I just buy the land first.
Regardless of location.
Yeah, regardless of location.
just keep the land. And let
I keep the land
price
first
appreciate,
because the
right?
land will appreciate, right? So maybe now it exceeded my budget and I can't rebuild now. Because end of the day, land price will definitely go up.
Okay. Speaking of which, there's a very interesting property that we're currently marketing. It's at Ceylon, being marketed by Seng Huat and Chewing. So it's so interesting is that this is a landed property, but the
Not
interesting point is that it's split into 2.
Yeah.
However, when you buy the property at the bottom that currently we are marketing for our clients, is that you also buy half the land. And that's a very interesting point. Actually, if you want to watch that home tour, just head on to PropertyLimBrothers YouTube channel, click on Ceylon. There's also another one that is very interesting, which I just went to yesterday. It is at District 5, Chui Chien.
Oh, CHIT.
Correct? Did I pronounce it correct? Chui Chien Road.
It's a detached CHIT.
3,000
near-
square feet detached.
Pasir Panjang area.
6.5 million is the lowest quantum detached home that you can ever find, because now the new subdivision rule is that detached has to be at least 400 square meters, which is about 4,100 plus square feet. But this is 3,000 square feet, so the quantum is kept nicely. Very nice, interesting land plot at the corner.
Yep.
Okay, also keep a lookout for the home tour. It's upcoming, so this is a little bit of promo. Okay, yes.
Okay, so back to that $4 million. Okay,
Yes.
I buy the biggest land plot that I can buy freehold or 999 years. And yeah, I can blow my budget. I just want to secure the land first. Assuming the land price is consistent, it wouldn't make sense that if I buy the land price, right, it is like the same PSF as something that is like 3-story built on the same street or the same locale, right?
The
So I can
disparity
just
must still be
hold the
there.
land first, and maybe I get a construction loan to do a rebuilding.
Yes.
And if I really totally blow my budget already, I'll just hold on to the land first. I just went to one of my friends' house this morning while delivering an option to purchase. And I thought, wow, the terrace beside, right, the owner is rebuilding it to the max GFA. And then I was saying, hey, you know my owner only bought it at like $800,000 land a few years ago. I was like, a few years ago? Okay, but after, of course, deeper probing, the few years ago was back in like 2011. So that wasn't that such a few years ago,
Time
right?
flies when you're having fun.
But can you think of it again, right?
Your friend must be having
800,000
fun.
land, right? That was at the point of time fire sale under value, right? And now the owner started rebuilding about 11, 12 years down the road. So this is exactly the same case scenario, because you cannot just want the land will go up in pricing. We know that when we buy a landed property, end of the day, the value is depending on what is the gross floor area that you have built up, as well as the land value.
Right.
So I'm just trying to maximize that.
Great. Okay,
just
talking
want to
about
have
2011, before I forget, fun fact is that last time is very strange one. Last time, before 20, I don't know what is the cut-off year. Okay, I still remember during the Lehman Brothers season, the mindset of a landed home is that a landed home is inferior to a condo. Last time, there was this, I think during 2009, the landed home at Gerrard Drive, corner terrace, $1.2 million. But the condominium, which is Seletar Spring, which is right beside Gerrard Drive,
Yep.
the 3-bedder is probably at about 800,000. So you see the gap is like 400K. Today, of course, Seletar Spring, the 3-bedder is at maybe about 1.4. But that corner terrace is at $4 million. There's a gap of $2 million. So instantly there's like a 300% gap. So in the past, last time, consumers always think that a landed home is more inferior to a condo, because when you tell people you stay in a condo, right, before Lehman Brothers season, it's like a little bit more atas. There's like condo facilities and all that. And
Last time got 5C, 5C.
Yes. That's why I
condo,
say condo
landed
country
is
club.
not a C.
Correct. And there was a shift. So the shift happened actually after 2013, when a lot of the cooling measures came in. And then in terms of the performance, landed just instantaneously shot up. So of course we have another graph that I couldn't bring up today. So basically there was a shot up where landed price index superseded basically condos price index. So that was a mindset shift. And then after on, landed homes just became more and more affluent. Of course, as you can see from the latest article, the core reason is because the supply is restricted. It's 73,000 landed homes compared to 340,000 non-landed homes. So basically, and now everybody just recognize that you're buying the land as well as the structure above the land. Josh, you were trying to say something, sorry.
Yeah, so just want to be a devil's advocate, because only Singaporeans and PRs, some PRs, can buy a landed property, which also means that the buyers pool are a lot more restricted compared to, say, a condo. Of course, entering, say, at $3 million, and when you sell at $4 million, it's just 500,000 over 3.5 million. So whether does the ROI really make sense comparing to if, let's say, I buy a private property at, say, 2 million, and then, I don't know, maybe I exit at 2.8 million. So, I don't know, do we have a statistics and data to show?
Sorry, what's your question again? Sorry.
So the question
brain
is,
fog.
if we buy a landed property, because landed property we can only sell to Singaporean and PR,
Yes.
naturally the pool will be lesser. compared to if I buy a condo,
PR cannot unless they get the LDAU.
LDAU
approval,
lah.
okay.
Yeah. So compared to if I buy a condo everybody can buy, right? With all the restrictions and all that lah.
International demand.
Correct. And if let's say I buy at 3.5, I sell at $500,000 quantum basis. But if I buy a condo say at 2 million and then I sell at 2.5, I still get a 500,000, but my ROI for the condo is actually a lot bigger. Yeah. So do we have a data? Maybe you can.
Write it
I,
down.
I don't have a data, but I have a viewpoint for this, right?
Sure.
Which is naturally landed will still perform better. Okay, overall there are like two aspects of things. Because when we look at your wealth, right? Return on investment is important, but it is not the
Yes.
most critical. Okay, I'll give you an example. For example, today, just now, you know that question posed by Melvin about $4 million, right? And then you all never blow your budget of that $4 million. You're leaving money on the table. So assuming
Sure.
today, it's the same scenario, right? If you are not maximizing, right, the entire value in, so what if if I don't spend my $4 million, I can only invest $1 million. So what if the 1 million I can generate higher ROI than what I can generate for 4 million? Because overall, my wealth will grow bigger by being able to invest in larger amounts. That's one thing. And that's also why you see that you don't see, let's say, listed companies, right? When they listed, right? And then they actually go into good class bungalow, right? Instead of buying maybe like 10 condominiums or like 5 terraces. Because sometimes what is that called? Like the final product is more than the sum of its parts. Like for example, 1 plus 1 is no longer 2. 1 plus 1 now is like 5,
It's like a
for
single
example.
2 carat is worth more than 2 times 1 carat.
Yes, got that. Yeah, so that is my rationale. In terms of number 1, right, you must be able to maximize your entire capital. And so ROI is not the main component.
Okay,
right?
so he's correct. So what Yu Rong was trying to explain is that when you are invested into a larger total asset value, there's a higher chance that this asset value can grow faster because you have more. I mean, naturally, somebody that has more properties or bigger property appreciation when it happens on a PSF basis, you have a quantum leap in terms of asset portfolio. Of course, just now that scenario, why some of them never blow their budget is because I said the caveat previously that we're looking at ROI as a main thing. But of course, if we're looking at asset expansion, provided you can choose the correct CCR property that can appreciate lah. Don't buy something that was stagnant lah. Correct or not?
CCR, I think I would say in terms of the selection process has to be a lot more stringent.
Stringent. Okay.
Okay, but one thing to highlight also, right, to George, right, also is, let's say if we were looking at buying a 2 million versus a 4 million, right, condo versus a landed, how much you actually invest in it is not, it's also not say the full 2 million and 4 million because there's leveraging.
Correct.
So you leverage on the OPM, other people's money, right, the bank's money to go. So technically, if you were to count how much like you invest in it and how much you earn and all that, it also makes a difference.
There's a cash on cash return calculation component versus the total price component. Correct. So to George's point, and coming back to just now, when we talk about the surpass and as well as the change in mindset, right, was that if you look at the graph, there was a recalibration of this dark blue color and the green color. Green color is basically landed graph. So as you can see from Lehman Brothers season, somehow they exchanged and swapped places after 2010. So after the recovery of Lehman Brothers, landed just exploded, but condominiums basically still grew, but much slower than landed property. So suddenly there was an explosion point here, this part, and we call this the chasm gap. So just to recap again, what is the chasm gap? Is that this point, actually the shift came because of all the cooling measures and ABSD being implemented for condominiums, and that, of course, drastically reduced the amount of foreign buyers for condominiums as well. And then suddenly, I think Singaporeans just realized the value of owning a landed property as well. And there was this consistent uptrend in terms of this price difference gap between the two sets of property. So partially, I think also because of the fact that everybody perhaps started to realize that there's no more landed stock and it just plateaued, right? So we're always buying refresh stock. It has to, I mean, sometimes when we look at the amount of properties that's being bought by boutique developers to buy, and of course now, you want to buy brand new Cat 4 homes is not easy as well because it takes a lot of work. There's a lot of risk on the developer. They have to hunt for a land and then rebuild, make sure they can complete within 3 years and sell within 3 years. If not, they'll be taxed with the ABS and stuff. So there's a lot of different kind of components. Yes, Yu Rong, you want to say something?
I think there's two other things because last time, number one, right, condos, there was a prior year, I forgot, that foreigners wasn't allowed to buy condos last time. And when foreigners can start buying condos, then the price went up for condominiums, right? So I think, of course, we can always entertain that little possibility.
Which year was that? Was it this?
I can't remember the year, right? So what if we entertain the possibility that one day your landed property, foreigners can actually buy? It will not be at this kind of pricing. We can give a very simple example, right? Why on the mainland today, mainland meaning in the Singapore island, right? At like $4 million, you can buy, let's say, like an Inter Terrace, correct? It's a freehold property. And Sentosa Island at 99 years, the detaches over there are like 25 million, which you can come to the main island and maybe
get a GCB.
Get a good class bungalow.
Inter Terrace at Sentosa now is about 10 already.
So this is the price disparity between giving us a glimpse, right, when only locals can buy versus when we open up to the international market. And so, if I can, hopefully, in my lifetime, I will also be able to own a landed property. Yeah, because that's the only way to own land.
Okay, so, but I think his question was that, should somebody buy that center portion there, which is the 20% of all the housing stock in Singapore, compared to 5% for a bigger exit audience? Because if you look at this, we talk about 2030, there's going to be 7 million people in Singapore, out of which, if I were to speak to 2 people on the road, one will be a Singaporean, one will be a foreign resident. And of course, we always like to talk about this fourth box here, which are foreign investors who are not living in Singapore. So basically, the condominiums are the only class of properties that opens up to every singular citizenship. So should somebody buy it? Because this is like 77 million. So we're thinking like 340,000 divided by 7 million, which is technically how many percent? 340 divided by 7 million.
5%, 4.8%.
4.8%, right? So it's like a ratio of 4.8% versus 73,000 divided by 3.5 million. 2%. So which one has a better probability?
I wouldn't really say 3.5 million because we also want to see the income brackets.
Hey, good point.
Fantastic.
Yeah.
Okay, coming back to the percentage, help me to make sense of the percentage. So we're talking about buying condominiums. You have 340,000 vis-a-vis 7 million people, and then 73,000 vis-a-vis 3.5 million people. Which one has a bigger audience? It should be the landed, right? The landed has a bigger audience, right? Because 73,000 vis-a-vis 3.5 million Singaporeans.
No, but yours is international market one.
Yeah, of course, there's this.
Then you must
there's this part that's not.
population.
No, then, okay, then we just look at this 3 population. No,
No, I think what George is trying to say, right, is that not all 3.5 million people
can
are
afford
equal.
landed.
Yes.
Yeah, so you have to see.
So we need to find charts. Let's do some charts to talk about income
Yeah.
levels.
Maybe you should ask Brian to come into this channel.
I think it's very simple, right? Because the top 10 percentile in terms of declared income,
Okay, so we need to do a
10%
demographics income chart.
okay, top 10% based on NOA declaration, right? If I remember correctly, if you declare about like 180,000, I think you are in the 10th percentile in terms of like income bracket, 180K, right? So generally, we always know that in terms of a combined family income, let's say, like 15,000 combined family income, I would say that generally 15K, whether it's a combined income, individual income, right, that will be sort of like a quite comfortable kind of benchmark for you to enter into a private property that is about $2 million range and higher. Of course, like I can be a lower income bracket, I can get into one bedder. We don't need such a higher income bracket. So in summary, I would say that just now I think
$2 million now. What is the monthly installment?
$2 million now, that's about 7,000 plus.
7 to 8,000 already.
That's
Because of the high
K.
interest rate.
last
No, 15K a bit
calculation,
tough,
right?
lah. I think 15K a bit
You need
tough,
about 24K combined income to afford.
No, 15K, you see, combined income, let's say husband and wife, total 15K. Take home, right?
Tough.
It's only about 11K.
That is tough.
then pay 7K mortgage, you're left with 4K disposable income. Actually, it's tough already.
Yeah,
Sorry,
every day
sorry,
you
sorry.
can only eat vegetable.
Let me cut that one out. The numbers are...
It's okay.
The numbers
It's
wonkus.
okay, it's okay.
It's the hard truth. Yeah,
No,
I
so-
think need to,
Unless interest rates goes down, lah, right?
Wait,
yeah.
But TDSR is not non-reversible. So basically, I think comfortable has to be 20,000. I think
I come up with the wrong number. Hold on.
comfortable
So,
has to be 20,000.
So this is actually a question that was asked during the recent webinar.
Right.
Yeah, I
What's
think
the question?
the question was
What is the comfortable level, is it?
whether people can still afford
No.
$2 million properties, right? The
Yeah,
FAQ.
something like that. Will
fantastic
Singaporeans
question.
be able to afford beyond 2 mil projects? So I think there's an increasing sentiment that prices are increasing, and are the income levels, the wage levels catching up with this increase?
$2 million your installment is 7,009 for a loan tenor of
8,000.
25 years. Let's say
Yeah.
somebody is 40 years old, 4% interest rate. You just loan 1.5 million, 7,009. And if we take a healthy level, we take 7,009 times CPS recommendation of about 35%, right?
That one cannot like that. so just now I say 7,000.
that means you have to earn about 20,000.
Yeah, just now I use 7,000 is mainly because I'm using a 30-year loan tenure, right?
okay.
So, of course, number one, I would say that generally, because as like how the prices went up, right? I think we have a discussion of this before, is that maybe in the future, right, people who can really afford private properties are actually owners who own private properties today.
Yes.
Because you are sitting on an asset that actually help you to build equity on top of your income
Correct.
increase, which allows you to actually get a bigger value property in the private property space. Yeah, so I would say that in generally, I think whether is it like condo or landed, which one is better for you? I think number one, we have to decide what is the price point that we want to enter. That's number one. Number two, I always mention that how much of it is based on own stay and how much of it is based on investment. Meaning, for example, if I have a portfolio of $4 million and I understand that like I have investment priorities and I have like a big family, then maybe landed suits the own stay needs because you need that space.
Yep.
But if today you are a couple and you want to have a more conservative approach, of course you don't need to stay in a landed property, right? And so it might make sense for you to split into two properties. Maybe the own stay one, $1.5 million. The one that you invest is at $2.5 million. Because I always share that like in the investment property, we can always be more aggressive. We can max out the total debt servicing ratio because we are using opium. Opium. Other people's... Okay, I'm just trying to make a joke now. Okay, we are using OPM, other people's money. And when you use other people's money, people are paying for it. And hence, you are actually more... You are safe in that context. But when it comes to the property that you are staying in, even though total debt servicing ratio is at 55%, I always share with my clients that it will be ideal if the monthly installment do not exceed 40% of your income. And then that will be more comfortable.
About 20,000. So if you look at this, $2 million purchase, assuming somebody has already fulfilled their first HDB property MOP and they are 40 years old, because now the average marrying age, I don't know what the latest statistics are, but just assuming it's
35.
30, 35, maybe after graduation, you part off for 5 years, right? Then you get married 30, then you get your BTO at 35, your MOP at 40, you sell it. By the time you can buy a private property, you're 40 years old.
Wow.
Then 25 years left. Of course, you can refinance and stretch to 35, but let's just take 25. Okay, have a look at this. If we go by the 40% rule that you shouldn't spend more than 40% of your monthly income, then you should earn about 20,000 to be comfortable. If not, at least I think 50% it will be about 16,000 to be comfortable, provided maybe you don't have an extravagant car or something like that. Okay, looking at this, if we do another calculation, this will also mean that something very serious is happening. If let's say you look at the average 3-bedder new launch is at 2.1 million, we're just doing Botany, right? 3-bed compact. Botany. At the J Farm. Okay. So, okay, why was that a joke? It's because Yu Rong keeps saying Botany at Bartley.
Oh my god.
Okay, so
Because I always have this...
Botanic at Bartley.
I quite like this project, Botanic at Bartley. Just by the way, Botanic at Bartley.
okay.
Just quick advice to the audience. This is not any product recommendation.
Okay, so Botany at Dairy Farm. Okay, just have a look at this. Just have a look. Down payment, including stamp duty, is 569,000.
Yeah.
that means if you were to buy a $2 million property, what's going to happen is that your HDB has to make a lot of profit.
Okay.
In order for you to go to that level. Okay, but what I'm trying to share is this. So there was this series of books that I completed a long time ago. It's by this author, Koo Sui Yong, a fantastic author.
Nice.
Yeah. So I read all his books. Of course, Koo Sui Yong is still practicing. Kudos to you. Okay. So there was this particular chapter that he was talking about the potential of a lot of current citizens and children inheriting their parents' property.
Yes.
Old money.
And there's going to be a lot of this old money coming from the HDB that will be passed down to their kids. And of course, this property has to be sold. So, for example, if a parent has a 5-room HDB, right, and they move on, they pass away, they have 3 kids. It has to be sold because all the 3 kids have their own property, HDB or private. They have to sell it and they will split. But if, let's say, it's to a single child, instantaneously that property is sold, maybe 500,000, fully paid already, 600,000. They have old money to instantly buy into a private property. So there will be this class of Singaporeans that will be using a lot of inheritance money to buy properties. And that will further escalate the price point. Because the natural instinct is that when somebody inherit funds, they want to also immediately see what they can do with this to park into an asset.
Yes.
Not just live in a bank, because if you calculate the average corrosion rate in terms of deflation of your money left in a bank in US dollars is averagely about 24% per annum. So if you leave your $1 million in the bank in US, technically they calculated what's going to happen is that your money will be eroded by 24% at the end of 12 months. And this is flooding to the rest of the world, because take note that when we talk about M2 money supply, we all share the same pot, right? So what is technically happened is also in Singapore, like you look at the car price that you can buy in terms of the type of car that you can buy 3 years back versus now. The type of car that you can buy 3 years ago, now you can only buy half the car. Similarly, the property that you can buy 3 years back, now you can only buy half that property. And of course, our inflation rate does not take into account property and cars. We only take into account food, right? So, sorry, I just suddenly saw that article yesterday that there's going to be very cheap hawker food in HDB coffee shops, mandatory or something like that. Do you all read the article? Right, you read the article, right? Fantastic. This is why our government is so fantastic. Because we control the food price, and in fact, I think a lot of people really love Singapore because we still can find cheap food.
Yes.
Right? But on top of that, I think cars and properties, you have to put into an asset class that fights that kind of asset inflation. And this is extremely scary because in future, we might be talking about a $3 million entry point for a new launch 3-bedder. In 5 or maybe 10 years' time, right? Okay, great. Sorry, you're trying to say something?
Oh, okay. I think back to the what you referenced. Back to what you referenced to regarding the Koo Sui Yong's article.
Old money, yes.
Regarding the HDB,
Right.
There is also another viewpoint. Is basically because they came from the boomer era, right? So after the boomer era, we have like lesser. We are an aging population. So what happens is, when I talk about HDB versus private property inheritance, HDB, your child is unlikely to be able to inherit it if they already own a HDB, because they have to choose between keeping their own HDB or inherit the parents' HDB. And likely, it should be selling the parents' HDB if it's older.
Yeah.
Correct? Unless they already own a private property and you are passing down a HDB that is acquired before 30th August 2010, then the beneficiary can actually hold on to that HDB itself without having to let go. So what happens is, in the article that Koo Sui Yong mentioned, that this influx of supply of HDB that has to be sold might actually cause HDB prices to come down.
Yes.
Temporarily.
Because there's too many of these baby boomers that will need to transfer all this
assets.
Yes.
In the form of HDB.
Yes. Yeah. Sure. That was.
Yes, 5 books.
Yeah.
5 of this series.
This part. Aging population, right? Is this even legal?
What do you mean?
Why do I have the whole book here?
For review
review
only.
only.
Aging population. Okay, this is the part.
Yeah. I own the physical book, so like I have supported it already.
Okay. I also own the physical. Oh, okay. This part. Have a look at this. This is the part. Look at this. Potentially, what's going to happen? The number of deaths of baby boomers generation in the next 5-year period, 20 here. There's going to be about 300,000. And what it's going to mean is that the amount of HDB properties that will be passed on. Yeah. Number of HDB flats released due to deaths in each 5 years period. Look at this. Escalating amount. So this is going to flood the resale market because the children will naturally have to sell it. Just now you mentioned a date, right? The cutoff date is when? Inheritance.
30th August 2010.
Just to maybe give a context to our audience in case they are a bit confused, like whether they can keep the HDB or not keep the HDB. Okay.
This is actually one of the cooling measures that was
So if the
implemented.
deceased bought the flat before 30th August 2010, the beneficiary may keep both the private property and the HDB. If they bought it after, then they cannot keep. Right? Okay.
You want to explain to the audience why is there this
come.
specific date?
Come.
Reason is because one of the cooling measures then was, okay, prior to 30th August 2010, anybody can always come back to buy a HDB without letting go of their private properties. As HDB prices was very heated up from 2006 until 2013, that was about like 100% increase in HDB property price. The government decided that, okay, in order to, maybe one of the reasons to restrict all this price growth, right, is to prevent private property owners, right, from being able to acquire HDB because it's cheap for rental yield as an additional property asset. And that's why this rule was implemented that if you were to purchase a HDB after 30th August 2018, after 30th August 2010, you have to let go of all your private property holdings within 6 months.
Yep. So this was in conjunction with the rule. So last time, actually before 2010, what happened was that a lot of private property owners, they own multiple private properties, but they come back and buy one HDB, and they can sell after 1 year, and they can also rent out.
If they don't take a HDB grant, they don't take a HDB loan.
Yeah, they get a bank loan. They can even take a bank loan. They can sell after 1 year. So that shot up the entire price of HDB resale properties, and that's why there was this rule, and that is in conjunction with this beneficiary portion. So basically, if the beneficiary already owns private property, it will depend on the date that the inherited HDB flat was bought by the deceased. All right. So basically, if they buy above before 2010, you can keep both. Now, if we come back to this, so this is basically what we're talking about. It will potentially flood the market. That might affect HDB resale price, but also once they clear off this property, it's technically a fresh set of down payment.
Yes.
For the buyers, the beneficiary to own, right? And then they will, and usually they will sell it if, let's say, there's at least 2 siblings, because they need to sell it, right? They don't know how to split and stuff like that, right? Grayce, you were trying to say something?
Yeah, but anyway, okay, if we can look at this, if we just zoom out and look at this from a more sociological perspective, right? It's actually very, very exciting what is happening in the entire HDB market. And public housing for Singapore has always been a way to uplift the entire economy, where we give a lot of support, we give a lot of grants, and I mean, the government. So HDB properties are like the first step for Singaporeans to start this asset progression.
Right.
Yeah. So with all these, it's a very fascinating topic to think about. With the supply of HDB, and also this in relation to the demographics, right? The demographic shift towards more and more aging population, where the HDB will now change hands. Yeah. I think it will have some have some implications on the market.
Yeah, okay, take note for that 2010 rule. We missed out one thing, is that if you inherit that, you have to move in.
Yep, correct.
You have to rent out your private property. And that is something that is very complicated in terms of its policy, because firstly, you have to make sure that the deceased bought before this, and then you have to move in. And so you might be living in a landed, but you have to move back to a HDB. So most of the time, they might sell. And of course, if let's say there are 3 kids, and the 3 children, one of them already own a HDB, and the will is that this HDB home from the parents needs to be split equally among them, and one of them already own HDB, then naturally they will sell because they cannot keep it.
And I think if they were to sell, there isn't that traditional, like, you are the seller, that mindset that you want to hit an extremely high price. You might just let go of the property if it reaches the right price. Yeah, not the rocket high price, but just a right price in the market, you might be able to just let it go and carry on, move on.
Right.
But I think overall, yeah.
I think this one will also trigger off a ripple effect. In the sense that if, let's say, I'm in that situation and I know that, okay, I have these HDBs that I can potentially cash out. And let's say it is a 4-room HDB, it's an older flat, let's say at about 500,000. Split with my sibling, let's say I'll have 250,000. I will then start to think, what can I do in my current property? Can I also leverage on the fact that potentially I'll have these $250,000 of cash coming in,
Yeah.
and I haven't even include, I don't know, even a CPF OA that I can potentially extract out from the deceased, right? And I use this opportunity to sell my current private property, and then I make one final big move. It could potentially be like this, because what is on a lot of people's mind is that if I don't act on it now, with more cooling measures that might come up in place, it might be harder for my next generation to maybe even own another property. Yeah.
Actually, looking at this table, it's a bit scary. There might be a potential oversupply of HDB properties in future. You look at this. I mean, now we're in 2023. There's a lot of demand for BTOs and all that because there was a lot of delay in construction and all that. Right? But if you look at this, the age category 25 to 29, by 2026, it's going to reduce, and it's going to further reduce in 2031, which means that government might not need to build so many BTOs anymore.
Yep.
And there's going to be a fresh set of resale properties from the baby boomer side. And that can, I think in terms of calibration of supply of HDB properties, it has to be very, very careful. If not, the price will be drastically affected.
And I think these are the details that are mostly overlooked by a lot of consumers, right? Especially all this.
I think overall there are like two parts of this story. I think like overall the government has already been doing a good job with regards to like in terms of like affordability in Singapore. Just not like to the point that you mentioned, in the sense that I do not really have to be rich. I can still I can still like live comfortably to a certain extent, because I can go to a coffee shop and have my under $5 kind of meal. I can take the public transport, which is very connected and accessible. And not like I don't even need to have like my own car to travel, right? And then I can go for a BTO to get a roof for my family.
Right.
And the BTO is like 9 years. So it will definitely last my generation.
Definitely.
Right? And I love the fact that a lot of our houses are actually 99 years. That actually prevents the new generation, right, to actually be restricted by all this old money. So imagine if all the properties are all freehold properties, right? It will be very hard for future generations to be able to start from scratch. Yeah, because there is no refresh of lease, there will be no new developments to inspire and recreate like
It will be an
new
old
usage of
country.
space. It will be an old country, right?
Yeah,
And
all
that's,
the buildings are old.
yeah, and I think that's what makes Singapore very different and unique, right, in this landscape.
Right. Awesome.
Oh, very exciting.
Josh is excited. So today we talk about a lot of things, and this was a very long episode because we have been sitting here for the past like 1 hour, close to 2 hours.
I think next time we order meal lah.
So we started from talking about, what did we start from? I also forgot already. We talked about some of the latest cool charts that we had.
No, the projects the ABSD.
Oh, we talked about the 23 projects
Yes.
that will meet
27
projects.
And
meet
then we
deadline.
talk about the projects that will hit TOP.
We talk about the 38 projects hit TOP, would there be oversupply? We talk about the latest cool chart of the supply index from Property Guru.
Yep.
Then we talk about the bedroom types in terms of sizing.
$4 million, what you can
$4
buy.
million.
And then we move into $4
If we
million.
have $4 million,
what do you
what
buy
will we
for
buy?
ROI? And then, of course, we deviated into
Talk about landed. The landed
landed.
segment. And then the HDB.
HDB. You talk about the baby boomers inheritance. Then we came to this part about should you buy a condo or landed? And then after that,
Decent food.
we went to... So if you want to contribute to any form of suggestions on what you want to hear on the next few episodes, do comment down below on the comment portion, and we're very happy to take in comments. So, of course, very happy to have a new guest today, Grayce. Give her a round of applause. Thank you. Yeah, I give our media team a round of applause behind the scenes. Awesome. And of course, our regulars, Yu Rong and George, with a new hairstyle and new cardigan. All right, so we will see you on the next one. And meantime, take care.
Bye.
Which
What,
camera?
do you just dab? Who did you learn that from?
It just came to my mind.
Okay.
Hey, why are you tilting your whole body?
Yeah, I need to look at you guys, otherwise like that. Yeah.
Last time you were sitting there
Yes.
before Grayce come. No, because the lighting shone. S-H-O-N-E.